right? This POI becomes your build up. When you go further, you have something like liquidity build up. That's when you have your when there's too much liquidity. I'll show you what I mean just now. When you have too much liquidity, that's a personal something. Maybe you are trading but still failing to break this side. In a case like this, if you want to be trading like me, in a case like this, I just mark everything. I wait for the breakout. I wait for market to take either the low or take the high, then and give me my confirmed entry model, then I enter. I don't like trading in a range like this. So that's when you now have multiple liquidities. When you have liquidity to the upside, liquidity to the downside, then when you go further, you also have something like accumulation, manipulation, and distribution. Now, we want to be trading distribution, right? We want to be trading distribution at all times, but we also look at for manipulations. You already know manipulation. This is what I mean by manipulation. Manipulation is the same thing. No matter the concept, manipulation is just market faking people out first before going to the main side. While accumulation is market building liquidity to the both side. We don't know which side it will go to. Our own is we don't predict. We don't say, okay, maybe it may go up, maybe it will go down. No, we just wait for the manipulation to happen. When the distribution happens, then we now start looking for what our preferred time, our preferred entry models. So this is on liquidity and structure. On liquidity and structure, no, I think I've deleted something else. On liquidity and structure, so let's go to our today topic. So our today topic, we are going into POI, because you must know where to enter your trade from. You must know where you want to enter your trade from. Are you entering your trade from an order block? You must have heard about that. Are you entering your trade from fair value gap? Are you entering your trade from a breakout block? So the three POIs I want to teach you guys is order blocks, fair value gaps, and breakout blocks. These are not just the only POIs. So don't say these are not the only ones. They have so many POIs. There are so many places you can enter trade from. You have places like support and resistance. You have demand and supply. Demand is more like, and supply is more like other blocks as well, right? So you can go out there and you can have something like mitigation blocks. Mitigation blocks and breakout blocks are almost same thing. So let's go. Let's go. There are so many things ones I'm not even aware of. So I'm just going to write. So first one we are going to be talking about is, okay, POI. POI means point of interest. That is where you want to take your trade from. Point of interest. So now, first one we'll talk about order blocks. This is a new everything I'm teaching you, it's like the Gen Z kind of stuff, you know. Let me just put it that way. That doesn't mean it's only Gen Z that use it, but like, you know what I mean. Now, other blocks, then you have fair value gaps, FVG, fair value gaps, also called, let me just put it, /imbalance. So if you see something like that's how we spell imbalance. I don't know about somebody else, but that's how I spell imbalance. So that's imbalance, normal imbalance. No, it's an English word anyway. Now the third one is breakout blocks. I really don't use breakout blocks. Why I don't really use breakout blocks just stands for my liquidities, because the first either engineered liquidity or inducements, breakout blocks are normally used them as liquidities because when I was learning trading, they always told me like I should close the high or the low. I should make sure I close everything. And if you are using breakout blocks, there's no way you can close everything to be too big. When I get to the charts, I will make you understand what I mean. So these are the three we'll be looking at. So what are order blocks? Order blocks are, in a case of buy and sell, let's talk about buys. Order blocks is the last, in case you want to buy, is the last bearish candle before the upward move that breaks structure. Okay? is the last bearish candle. So let's say the definition that I'm using, look at this. So market was selling and you are looking for buy. Let's say your POI was somewhere here. So now what would this be? So once this breaks structure and give you your inducement, your order block is this last second. So the last second will be somewhere here. You know, this, they will break this. If you go to candles, they will break this. So your last second will be, this is called order block. This is on a buy signal. So it's your last second before what? Before the up move that broke structure. And now order block stands. Now I'm trying to put this liquidity in point because you know you have to put everything that I've teach you together. Now, so you don't just say the last bearish candle that breaks structure, so that you don't just go and enter. You must still wait for what? For your inducement to print. But your order blocks always comes before your POIs will always print before your liquidity. Your liquidity is just to protect your zone, or more like confirmation, right? To confirm your POI. So the first thing you need is structure. Actually, the second thing you need is your POI formation. Then the third thing you need is your what? Is your liquidity to protect your what? Your POI. That's the POIs are everywhere. You enter the chart now, POIs are everywhere, but you must have what? Your liquidity protecting your zones and combining with structure so that you don't just trade patterns. So it's logic. When you are trading, it's logic. You use logic to trade, but it's also mechanical because I'm teaching you something that you can actually look at for in the chart, right? So now, this is order block. Now, what is a fair value gap? So this is in a buy scenario. So if in a sell scenario, it's the same thing. It's the last in a sell scenario now, is the last bullish candle. When I say bullish candle, the last buying candle. So now, since we are in a beginner class, let me use simple terms. So in a buying scenario now, it's the last second before the impulsive up move that broke structure, right? That's what you call your order block. The last second, not last buy candle in a buy scenario, the last second. Now, in a sell scenario, is the last buy candle before the downward move. That's what we call your order blocks. So now, same thing. So if I want to just twist this, I just do like this. You can see it has become sell. It has become sell. So it's your last buy candle before the downward move. So this becomes your order block. So that's that. So let me twist this back. Okay, so now that's the order blocks. So now, what's an imbalance? What's an imbalance? An imbalance is 3 consecutive candles that has gap in the middle. So you have one. So this is an imbalance. Imbalance, most times, your imbalance comes before your fair value gap. So your imbalance comes before, or it depends on how you look at it, or after your order blocks. So if you have your imbalance before your order block, that makes your order block to be more stronger, because most times markets will 70% of the time react from what? The imbalance first. That will give you your liquidity. So your imbalance is this. So like this. This is first candle, this is second candle, and this is third candle, and this is third candle. You can see that this is your fair value gap. The middle of these candles becomes your fair value gap. This is the gap. So the way market is this is inefficient delivery of price, right? The way the market I would say algorithm, or the way the market is programmed. Every candle is supposed to move like this. Let me see if I can still draw this away. No. Let me see. Hold on, let me see if I can see this. Okay. The way the market is programmed is supposed to give something like this. Something like this. Something like this. You see, every candle is supposed to interact like this. Yes, so if there's any gap, market will come back to fill that price. Market will come back to fill this price before moving down or moving up, as the case may be. So that's an imbalance. So imbalance is just 3 consecutive candles. It doesn't have to be the same color, because that's used to be some people's problem. It doesn't have to be the same color. Can be red, can be green. In the case you are using red and green, one can be red, one can be green, or 2 can be green. But the only constant there is a bullish fair value gap. Now I'm using color now. A bullish fair value gap is always green. So if you want to buy, unlike other block that I said, the buy order block is always the last bearish candle, right? The last selling candle. Now in other blocks case, a bullish fair value gap is for buys. You cannot sell from a bullish fair, and a bullish fair, in case you are using green and red now, a bullish fair value gap is always green. While a bearish fair value gap is always red. Now I'm using colors. That's the that's the only standard. You cannot say this is green, this is red, and this is red. You want to buy from here? No. Except there's further building of price. But if this middle one is red, you are supposed to be selling from there because that's confirmed that that's a bearish fair value gap. Quote me anywhere. Yeah, that's a constant. So that's for fair value gap. Now, what are breaker blocks? Breaker blocks are simply failed order blocks. Breaker blocks are other blocks that have simply failed. So what do I mean? So now you have this. Now this is other block you want to buy from. For some reasons, markets do something like this. Boom. For some reason, that's why you hit stop loss. You hit stop loss on this. Now this becomes a breaker block. This becomes a breaker block for you to enter trade from. So what do you now need? You just need your liquidity to, you need your liquidity to, or engineer anyone. Then you buy from you sell from here. So do you see? So breaker block is opposite of other blocks. So if your other blocks fails, it becomes a breaker block. And if your other block fails, it becomes a breaker block. But it's not the other way around. Breaker blocks hardly becomes other blocks. For other blocks that fail, always becomes breaker blocks. Now I'm just trying to so that you don't get confused. I'm trying to answer a question that you have never asked. Now, let's say normally you are supposed to continue your sell like this. This is called breaker block. This is a breaker block. So breaker block is just a failed order block. When you go out there, you might hear you need supply to fail. When supply fails, that supply becomes a demand. There's something they call when support turns resistance, resistance turns support. All these are gotten from that. That is the foundation of Forex. But we tend to take everything to particular because we don't have the patience to be sitting down and doing one-to-one. So we want to make sure we refine our zones and at least cash 1:5, 1:3, 1:4, just like that. So that's why all these things come into play, right? That's why all these things come into play. So other blocks, the last buying or selling candle, right? Before the upward move. Your imbalance, a gap, chain 3 candles, right? Now, breaker blocks are failed order blocks. It's simple. This is the simplest way you can understand it. I'm trying to call this in different names so that you don't pay for people. Please, try and mute.
Ogunmefu, please mute your mic. Ogunmefu, my Lord is good. Hallelujah.
Wow, that caught me off guard. Okay, let's go again. Sorry. All right, so now I'm trying to give you guys this so many names they call it so that you don't pay for so many mentorships. Because once you see, like I say, if this is your third class with me, I mean, as the fifth one, I think so. Okay, fifth one. Now, I'll always put in my own experiences, just chip in my own experiences in. You will see so many names out there. I just want you to know, mentorship is not the problem. Mentorship will not solve it. What will solve it is if you are ready to work on it. You are ready to work. Technical analysis is not really big deal. You can get this in no time if you put in the work. The main work is you as a person. You have to understand yourself and trade the way you want to trade it. You can understand all this in no time. And so you don't need to be jumping from one mentor to another. Instead, I prefer ever use the money and just go and trade with it because you still have to lose. And when you lose, there's nothing that will teach you better than losses. Losses teach you a lot. Losses teach you a lot. So let's Let's go back. So now I want to go into the chart. So before I go into the chart, POI means point of interest. Other blocks, that is in the case of buy, that's the last sell candle before the upward move. In the case of buy, in the case of sell, that's the last buy candle before the downward move. Imbalance is just 3 candles that do not touch each other. Now this doesn't have to be time. It's not time frame specific. 4 hours might give you one big candle like this. 4 hours might give you one big candle. Like if you go to 15 minutes, there are multiple fair value gaps. Multiple. As long as 4 hours give you this big thing and you go to 15 minutes or 30 minutes, you see multiple. So when you now move further again, then I want to tell you which of the other fair value gaps you should be taking. Fair value gap you should be taking is the one closest to the, if you look at it, anyone that is closest to the liquidity is the one you should be taking. But the most safe is the one closest to the other block. That's, let me not go into that. So that's for that. It's not time for them. Breaker blocks is failed other blocks. So now let's come to the chart. Let's come to the chart so that you get familiar with the charts. Enough of those schematics. So now, as you can see even from my chart, you can see that I marked some places in the chart. From here, you can already look at other blocks. This is an other block. This is an other block. This. You can see the last buy candle. The last sell candle rather. Look at it. This is a bullish order block. This is a buy order block. This one is a buy order block. Right? This is a buy order block. Also, this is a buy, but this is not where you will buy from. I'm not buying from there, but I'm just trying to like show you other blocks. Now this is 4 hours. Now, so first of all, I will look for other blocks, then we'll now look for fair value gaps together. So let's go to 2 hours. So I'll show you guys why I marked all this. So now, first of all, why did I mark here? This place. Now let me quickly remove this. No, let me hide this. Let me hide this. Now, why did I mark this zone? Okay. Also, if you look at it carefully, you will see that there's a manipulation here. Once there's a manipulation here, this becomes my order block. But I will not sell from here. Why? Because I needed this low to first fail. Once this low failed, then I will now look at where is the next zone that market did not mitigate. Let's go to 1 hour. Good. Now you can see we have this manipulation. First of all, we have this manipulation. I'm believing you already know what manipulation is. Manipulation is just sweep, like market. See market just go to the upside, then we go back to the downside. So, oh no. If you don't know what manipulation is, try and watch that video. Watch it again. Because Pastor told me the videos are on YouTube if I'm not mistaken. So now this is manipulation. This my first if I'm looking for sell, my first indication that okay, we might be ready for sell is this. I already have the manipulation. Now you can see the market has already come back and mitigate everything here I want to be looking for. There's nothing clean here. And also, to make matters even better for me, you can see we have another manipulation. Now, all these things, you must be very sharp. These things doesn't happen just once. This is a 1 hour candle. This whole thing is a 1 hour candle. From here to here, how many hours is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. You see, that's almost like 1 day. So it's not like you will see it happen. It's not like it's something that will happen in 2 seconds or in seconds, rather. So you will see it happens and you mark your zones and you will wait. That's why I say traders have to be patient, right? So now, once we have this, I'll mark this out. I'll mark this out as my order block. Because why? I already have manipulation. And then another manipulation. So there's nothing for me to be looking at for now. The next thing now, we had a break of structure. That's if I was looking for sell. Now we have another break of structure. This is called break of structure. Have we talked about break of structure? I think we have. Break of structure is when our market breaks from, like the name implies, break of structure. More like this is break of structure. This is what I mean by break of structure. Look at this. This is what I mean by break of structure. Now, boom, this is called break of structure. This is called break of structure. Market break this structure. Market break a low or break a high. It's called break. There's a TikTok video I watched. Somebody called this exchange of liquidity. Buyers exchange liquidity with. So if you now hear names like that, don't say, they have not taught me this one. So it's the name. You should not be bothered about the name. What you should be bothered about is, what is this? What is the meaning of this? You should be bothered about the concept instead of name. Don't be fixed with names. Right? Try to read it. Don't be fixed with names. Names can change. Tomorrow they can call it another name, but what is constant is the concept. So now you can see that this can be my POI. POI. You can see I call it a POI. Also other block. Now this is the point I want market to come back into for me to enter my market. Now, what else do I need? Inducement, which is this. Now, what else do I need? Inducement. At this point, this was my inducement. Now let me remove this. At this point, this is my inducement. I need the market to now come back to this. So this is my inducement. Now, if I may ask, why didn't I say this was my engineered liquidity? This was my inducement. Market hasn't printed that at that point. So this is my inducement. Why did I not say this is my engineered liquidity? So not to, for those, because we break structure. This is why this is my inducement, right? That's why this is my inducement. Now, also, if you look closely, you also notice that this is a demand. This other block. And I told you guys, when other block fails, it becomes what? It becomes breaker block. So this is actually a POI too. Somebody can enter trade from. Though, unfortunately, those that entered from here, they hit stop loss because market took it out at one go. But that doesn't mean it doesn't work. At this particular point, it failed. So this is a good example of what? A breaker block. A demand failed, it becomes what? It becomes supply. It becomes breaker block. So that's for that. So now, at this point, what I needed market to do was come from here. Since market has reacted from here, now what am I looking for? Since now I needed market to come back into this. If I'm looking to buy from this, if I'm looking to sell from this is what I wanted, right? But market is not like that. You can see market still printed another. You can see market still printed another word. Now, this is not inducement. This is an engineered liquidity. Now, this is an engineered liquidity. Then, this becomes what? Manipulation, single candle manipulation. You can see that a candle high was swept. You can see that this candle high was swept. And if you took the trade from here, trust me, except you are looking for full take profit, right? You didn't hit stop loss on this trade. Now, if you are taking the trade from this, if you are taking the trade just from this guy, you didn't hit stop loss. You get it. Even if you are taking it from this last buy candle before this downward move, it didn't hit stop loss. Except you are waiting for full profit. Now, look at this. When market reacted from this, market moved all the way back to this particular point before finally coming to fail it. Yeah, this candle opened here. This candle opened here, first sold, then it bought, then still come back all the way to this point. So at this point, you can even go to break even. What is called break even? Break even is when you move your stop loss to your entry. You can actually move. Stop loss means stop loss. I don't know. That's where the amount of money you want to lose. So I think that is basic. So you can see that it not still hit stop loss. This is a good entry model. This is a good entry model for me to sell this market from here. Why I did not take this trade is simply because it's so close to my buy zone, and I do not like trades like this. That is when you now grow. You now start selecting your trades. But if everything is constant, this is a good trade for you today because you have your engineered liquidity, which is this. Now you have your entry position, which is that. Then your target should now be where market is coming from to this low. So if you want to wait for full take profit, you use stop loss. Now we'll be talking about other blocks. You can see that I'm particular about other blocks because that's what I use a lot. When I was doing TikTok live streams, I think that was 2024, I use fair value gaps a lot. That's on gold, fair value gap works a lot. It works a lot of times on gold. Now what's fair value gap? This is fair value gap. This is a fair value gap. A fair value gap is this. Now let me now delete this. Let me now delete this. And let me now also delete this. Now this is a fair value gap. Fair value gap, you can see this first candle. 1, 2, 3. Now the gap inside of this place is called fair value gap. There was a student I was teaching once, and he now said, why did they call it fair value gap? I said market moved too fast. There was imbalance of price. Market had to come back and balance it. And instead of that, why they should have called it unfair value gap. So in real terms, market moved too much. So market has to come back, take more orders before going back to the main direction. So this is called a fair value gap. Now also, as this is called a fair value, this is also a fair value gap. Because these candles, these two do not touch each other. This middle is a fair value gap. Now the same way with this and this as well. You can see that this one do not touch each other. These are all the same colors, but that doesn't mean if this is maybe let me say if this is blue in my case and this is black and this is black, that doesn't mean it will not be a fair. It's still a fair. Just that the middle one, the color of the middle one, determines if it's going to be a buy or a sell. Because if it's a sell, it's always supposed to be what? A bearish candle. It's also to be a bearish candle. So in a bearish fair value gap, you sell from bearish fair value gaps and you buy from bullish fair value gaps. So you see, this is a fair value gap, this is a fair value gap, this is also a fair value. Then when you now go a bit further, that's why you now need to now know if this is what you take, this is what you take, or this one, or if you actually wait for this. If market do something like this for me, if market, let me say markets move like this to this point, then we break below. I'll enter from this fair value gap, but my stop loss can still come to this, but I'll enter from this fair value gap. Why? Because this POI is closest to what? To this liquidity. This is the closest POI to this liquidity. So I will enter from this fair value gap. Then I'll put my stop loss just above here. That is why I prefer waiting for other blocks, because if I enter here, my stop loss still goes there. Instead, why don't I just wait here? But the only downside to that is I missed a lot of trades. Since I'm waiting for here, I'm waiting above, I miss a lot of trades. That's just the disadvantage. Everything I have advantage. But when anyone that goes well for me gives me a lot of profit as well. So the RR, risk to reward, is always higher. So I don't know. Do you get the picture of the three now? Because I've mentioned fair value gaps, I've mentioned other blocks, and I've also mentioned breaker blocks. Do you get it? Somebody get it. So let's go back again. So now also, this is also what? A demand, supply rather. This is also a order block, right? This is also an order. You can see that this is the last buy candle that I marked. This particular one is the one I marked to what? To sell from. Which market sold from? Also, I did not take this trade. Also, I did not take this trade, but it's also a very good trade for me to like look at. Okay, of course. Some days I might take it, some days I might. Why is this trade valid? Now you can look at this, all this inside of this, everything inside of here is engineering liquidity. Why? You can see that this did not, though this took out this low, but at the same time you can see this. Now this refused to take this low. So if I'm selling from here, I'm targeting everything in here. First of all, in here I will take my maybe partials or something. But these two qualifies for me to enter from here, because if you look at it, then when you go further, you'll now hear something like order flow, bearish order flow. You can see, let me leave order flow now. Order flow, now you can see this, you can see mitigations. Now the next point is this, and if market continues to sell, if I have maybe something here, then we go back, maybe let me say I have something like this. This market is coming now, I have something like this. Even though just a reaction, this is another good zone for me to do what? For me to sell again until this low gets taken out. Then before I will now rest and I say, okay, let me now look for buy. And also, if market now says, okay, no, we are tired of selling, market breaks above, this becomes what? A breaker block. This becomes a breaker block. And I know that I will have a fair value gap somewhere here. Then also I'll still have other blocks somewhere here. Then we can continue buying. Do you see the logic behind it? So it's not really a pattern I'm trading. It's not really, don't really trade pattern. You trade what market is giving you, but you must understand what market is presenting at the particular. Because if you want to trade just other blocks, look at it. This is other block, but I will not take this to straight. This is the last buy candle before this downward move now. You take out this low. You can take that as break of structure. Then this is, but that's not it. Everything has to align. Everything has to align for me to trade. This is where discipline now comes into play. This is where you now use discipline to like now help you, because market will give you so many things. If you are looking just for other blocks, other blocks, other blocks, other blocks, other blocks, you will see so many other blocks. In this point, I can point more than 6 other blocks that failed. This is an other block. You can see that we failed it. Just a little reaction, then we failed it. This is another block as well. This is another block. This is another block. This particular one, though it's still moving a bit. This is another block. I will not take this particular one. Why won't I take this trade? Because there's too much liquidity at these lows, and also we haven't even failed a high. We haven't even failed a supply. For me to start buying, buyers has to win a war for me to buy. You see that? So that's for that. So let's see if I can still, okay, GU is more even clear. GU and EU are almost same thing. In fact, they are the same thing, right? Now you can look at this. Let me quickly hide this. I did not take this trade as well. This particular one, I did not even take this one as well. Now also, 4 hours, still the same explanation with what I just did. Same explanation. You can see manipulation. Now also, just look at this. You can see the market reacted from this fair value gap. We sold a bit. Now this becomes what? The liquidity that qualifies this zone for you to now continue selling from this point. This qualifies it. Manipulation, you have your what? Your engineered liquidity at this point. This is your liquidity that qualifies this zone for you to start selling. If you sell from here and you hit stop loss, it's a fine trade. It's a very good trade. Now, at this point, there's no need for me to now say, okay, I want to wait. Now, look at this. Now, if I want to further build this price, let me say I want to build this price. There's no need for me to now say, I want to mark this, just this. Because this has already mitigated. Instead, I will mark from here. Or if I don't want that, I will refine it. I'll go down to lower time frames. I'll go down to, even in 2 hours, you can see that everything here is already mitigated. The only unmitigated candle here is this particular one. But that doesn't mean you enter from here and start selling. If you look at this closely, you see that you still had manipulations. So these things, if you study them, you study the market, it's not fast. It's not fast. Look at this. Before market might get to it, might even be tomorrow. Now you can see this. This had manipulation. We swept this candle high. We tap into the unmitigated 2 hours order block. This is some people's strategy, but this is not my strategy, right? So for my own strategy, I'll still wait again. Then I'll wait here. At this point now, I have my POI. My structure is already aligning. I have my POI. What do I need next? I need liquidity next. Here is my target. My target is this particular low. Or if I don't want it, I want this target. I can still target this whole lows. Now, at this point, what do I need? I simply need market to just react from somewhere. How many minutes for this candle to close? On the 2 hours, I need there's 34 minutes now for this candle. This particular candle will close in the next 34 minutes. That is by 9 p.m. this candle will close. Once this candle closes, I will now know if this is a fair value gap. Even this is not a fair value, this is also a fair value. You can see this is a fair value gap. Now, what do I need next? It's my liquidity to print. Once my liquidity prints, or let's say it prints from somewhere here, then I can go in boldly here and sell. And if such a trade hits stop loss, fine. It's very good. If such a trade hits stop loss, it's very good. Why is it very good? Because it's a strategy that I taught you that you actually traded. Of course, when you post such a trade and you hit stop loss, there will be a lot of people coming for you like, oh, you don't know how to trade. It's normal thing. Those things are normal. And when you post your winnings, you will see a lot of congratulations. That's the game. In fact, that's not only Forex, that's life. That's life. People only clap for you when you make it. That's life. That's not only down to Forex. That's why Rich Man has a lot of friends. That's it, because you are successful. But when you are not successful, when you are poor, you don't have a lot of friends. It's just the irony of life. That's how they wait. But in the case of Forex, you have to be dogged. You have to be like really dogged, right? You have to know what you are doing. You have to have that conviction. And the only way you have conviction is when you go to battle, when you go to the battlefield and you get blooded, you understand? So that's just it. So coming back to like our POI selection, other blocks. I'll be particular on other blocks because that's what I use a lot. Then I use fair value gaps. However, when we go to gold, I will talk about fair value gaps extensively. Fair value gap is nothing, it's not a big deal, just imbalance. Imbalance. And secondly, I will not come and mark this and say this is an imbalance. No, I will never do that. Let me now mark it and say this is an imbalance. No, this is not an imbalance. Why? There's a gap from here and there's a gap, of course, but this candle has not closed. This has not closed. This is not an imbalance. It has not closed. When this candle closes, yes, it becomes an imbalance because we still have a long way before this candle will close. Who knows whether this candle will close like this? Then the imbalance you marked becomes rubbish. So you must have that patience to actually wait. You must have that patience to actually wait. Now, this is an imbalance. Having this imbalance close to this other block alone confirms this, makes this become extra strong. Will I put it that way? Or extra, let me suggest extra strong, because this also has manipulation. There you have your fair value gap. This is a zone that you can actually look to trade from. All I need is just liquidity. All I need is just liquidity to do what? To enter this. And you can see that even in 1 hour, there's nothing. There's nothing here. There's nothing here. Let's go to 30 minutes. Except you want to use 30 minutes, you can now say, okay, this single candle liquidity now. Now, I've not taught you guys single candle liquidity. This is like far ahead of your pay grade, but you will get there someday anyway. So now this single candle liquidity, you can say, okay, you want to, why is this liquidity? Because some people now might want to use this as what? As their entry. So you use above them, so they become liquidity to you. It's simple as, it's not that simple, but take it that it's simple. So let's go to like back to our 4 hours. Let's go back to our 4. And you can see, like I said, 4 hours. You can see that just one big candle. And how many minutes for 4 hours to close? You have 2 hours, 30 minutes for 4 hours to close. So that's for that. So that's for that. So let's see any other pair. No, I don't really trade. This is more like an indicator. So now you have GJ. Now, this is a fair value gap. This is a fair value gap. But there's no liquidity supporting that you should trade from here. Now, you can see that I drew 2 boxes here. This up one here, this a breaker block, failed supply. Now, this is a demand, right? This is a demand, order block. And market is reacting from what? From your order block. Market, but that doesn't mean I'll still enter this trade. Though I'm still currently on GJ buy. I'm currently on the buy. I'm still looking to add more positions because I'm targeting this high. Now, why am I targeting that high? You can see from here, structurally, this is more like primary. This is the primary leg coming back to just retest. Then we are going back all the way to the upside again. And if market comes all the way to the, I'll still buy again. I'll still add more positions. That's the way. So that, because I don't trade every day. Throughout this week, have I taken any trade? I took only gold. I think I sent gold to my private community. I think that one hit break even. And that was that. And that was that. And that was that. The other trade on Friday that I told you guys about, that one gave me a lot. It hit take profit. Though the UJ actually came back to his stop loss. The UJ, USD JPY. Where was that trade that time? I think it was somewhere here. I think it was somewhere here. So this came back to daily. This is daily fair value gap. So this is, sorry, that's 1 hour. That's 1 minute. So this is daily fair value gap. Now you can see that it's not time specific. This is daily demand. This particular one is daily demand. Order block. Now you can see the fair value gap. Let me remove this. Let me now expand so that you can see it very well. Now this is daily fair value gap. Market reacted from the fair value gap. And the market is moving all the way to the upside. And now, if you look at it very carefully again, you have another fair value gap, daily fair value. This becomes what? Daily demand. This becomes daily. So it's not like what you will see once you get a graph of it, what you will see on 1 minute, you will see it on daily. It repeats. What you see on 1 hour, the same thing you will see on 4 hours. But how can you actually read it is the only problem you have. How can you actually read it is the only problem you have. And it's only with time. You can't rush it. There's this proverb that said, you can't give birth to a baby in 1 month by getting 9 women pregnant. So everything is time. No matter what you want to do, it's time. So that's for that. So now you can also see other block. This is an other block. And now, very good. This is reacting from what? A breaker block. This was resistance. Now, once market break above it, now this is, and also this now double chance you as what? As a fair value gap as well. So fair value gap, double chance with what? With a breaker block. Now, this is, somebody will tell you, I entered the trade because of fair value gap. Somebody also say, I entered the trade because of this breaker block. Both of you are correct. Both of you are making money. That's the most important thing. But don't, by all means, try not to compete. Try not to use your results that you are just starting. Try not to use your result and compare to me. Because I said I made such an amount of money. Or somebody will say, I started just last month and I'm making $60,000 now. Don't use yours. Don't say, don't be discouraged. Don't say, maybe this is not for me. Maybe I'm dull. All those. No. You don't know what the other person, they don't even know whether it's fake. Because in Forex, there's a lot of fake. I will not lie for you. In Forex, there are a lot of fake. That's life anyway. But in Forex, the fake is just much. Some people that you look up to when you meet, I've met people in the industry. And I can tell you for a fact, 70% of people you look up to that say they are what they are not what they are. I'm not bashing anybody. I'm not calling out anybody, but I've met I think 90% of Forex traders. Anybody you can call. I've met like 90% of them. And I can tell you for free. If a Forex trader has 30,000, Forex trader will tell you he has 300,000. Because that's the belief that for me to get 30,000, I can make 300,000. But they don't have the 300,000 that time. But they'll just let you know that I have 300,000 because they know with time they can actually get to that 300,000. So it's a lie, maybe quoted in truth, or you can put it that way, any way you want to put it. So that's for that. So let's go to gold. While I'm coming to gold, I just want to show you guys some secrets. Let me just put it that way. You can see at this particular point. Now, this trade, you can look at this one particular one is from a breaker block. This from a breaker block. This here is from a breaker block. Now, why breaker block is just more like support turn resistance turn back to support. It's simple as that. You see that? So this is where people were trying to sell from. This sponsored all this move down. This sponsored all this move. So this is supposed to continue the sales. But since we cannot continue the sales, we look for buys at this point. Now, why won't I sell or buy in this range? Because there are so much liquidity. You can see liquidity to the downside. Also, you can see liquidity to the upside. So if I want to do anything on this market, I'll only look for sell in this POI. Why will I look for sell in this POI? This is an order block. You can see it very clearly. When I talk other blocks, you can see then this reacted from a fair value gap. This to this. This is a fair value gap, which market reacted all the way down. It's not rocket science. Now the next thing is here. The next thing is here for you to look for your sales. As long as I'm concerned, I need market to break out of this point, this whole thing for me to now buy. Now also, if I want to also buy, let me show you guys something. I'll just make mention of it, but this is not something I will want to teach you guys now. Or if market wants to buy, if I want to buy anything from here, I'll buy from just below here. Now, this is called Malaysian support and resistance. This is called Malaysian support and resistance. You can see this. I'll not talk Malaysian. So Malaysian support is just your market open and close, but it's not all market open and close. You must know a particular zone and the particular thing you are trying to do, right? Market open and close doesn't mean it's candle specific now. This is candle specific, but let's not go there. Let's not go there, please. So now, the only way I'm looking to buy, because everything here is mitigated, everything here is down to 30 minutes, down to any other thing, everything here is mitigated. Now, if this sponsor cannot break above, the next thing you can look to enter is at this point. And if this point holds, this goes. And if this holds, this goes. It's as simple as that. If this holds, this goes. If this holds, this goes. If this is to sell from here, I'll target exactly this low. And if market is to buy from here, I will target exactly this high. But from the way I trade and from experience, I will not trade anything in this range. You see this? Let me mark this box for you. I will not trade anything in this range. Something like I will not trade anything in this range because there's so much liquidity to the top. There's so much liquidity to the down. So there's this saying I normally used to saying in TikTok live streams. There's no need joining a battle that you don't know the winner. Instead, why don't you wait for the winner then just join the winning team? I think it sounds lazy, but it sounds also wise. You see two people fighting. Clearly, you wait for the winner, then you say, this person is the winner, I join your team. APC and PDP. If you're a politician kind of person, yeah, join the winning team. No need to do I want to change the world. You can change the world, but that's just my own perspective anyway. So let's go. So now, fair value gaps on gold works a lot. Fair value gaps on gold works a lot. Now, just to recap, this is an order block. You can see the last buy candle. You can see it. This is an order block. This is your liquidity. Your liquidity fails to break below. This is your liquidity for your sell zone, which is this. Very clear. Now, I will not talk about this one. Now, this is your buy zone. As long as 1 hour is concerned, this is your buy zone. This whole 1 hour order block. So you can see it's the last second. Look at it. It's the last second. Somebody might say, what of this? But now it becomes, why use this? Why use it instead of this? This will be more better for you. Now this is big. Since this is big, you can look for confirmation in this. Or you can use the whole thing. But this is too big for your small account anyway. It's too big. Even with 0.01 lot size, this will take almost like $100 or something like that. You get. So can look for, so this is, as long as trading is concerned, this is another zone for you to now, this is an order block for you to target all the way to this upside. Target all the, because this is the final target I'm going to. If I'm going to be buying, that's the. Now let me now show you something as well. The same way, somebody else can still be waiting all the way down here. See here? Now, I'm waiting all the way down here. Now, you might be wondering, why am I using this? This is open and close. This is Malaysian support and resistance. Now, this is more like broker space. If you go to other brokers, this is a 4 hours zone. This is a 4 hours order block. But that shouldn't be a problem for you guys. That shouldn't be a problem. So you can see order block, fair value gap as reacted. The next zone is order block. Somebody might say breaker block for the problem. You can see that when I'm teaching, I'm not specific on breaker blocks because I can't teach you what I don't use. I only know them. I want you to know them. But I can't teach you what I don't use. I can only teach you what I use. So you see that. So now let's fair value gap, order block. This is bearish order block. This is bullish order block. You sell from here, you buy from here. The same way this is order block. Also, this is order block. The same way this is order block. Also, this is order block. But this is bearish order block. This is bearish order block. This is bearish order block. The same way this is bearish order block. There's no clear bullish order block in this place anyway. Let me go to 30 minutes. Let's see if I can just pick out. The same way this is bearish. This is also a bullish order block. This All you need is market to break above. Then you can also look, say, okay, on 30 minutes time frame, this has taken liquidity. You can look to buy from here again. But at the end of the day, it now becomes something of specific. That's why your growth is specific to you. Somebody else will say, in the same class, somebody might try to buy from here, but somebody else will say, no, I don't want to buy from here. I'll buy from somewhere else. It becomes specific. You might be trading in 5 minutes. Somebody else is trading on 1 hour. So you must also know which race you are running in the forex market. Somebody might be trading. Let me go 5 minutes. You see this. Somebody might be trading just from here to here, from this point now to this point. So the person posted 600,000 or $60 or anything profit, and you are feeling left behind, but the person is trading 5 minutes. Now, 3 minutes. You can see that. I can go as low as 1 minute. Sorry, that's 1 hour. I can go as low as 1 minute. You can see that somebody might just be trading. This is a good example of a breaker block. This is a good example of a breaker block, this particular one. But this is 1 minute. All 1 minute zone fails a lot. Now, this is a good, somebody might just trade from here, go on, stack a lot of positions on this thing, go on Twitter and say, I just made $300,000. And you are waiting at 1 hour. You are waiting 1 hour. Do you see that? You are waiting on your 1 hour zone. Maybe throughout the week, you'll be waiting because this happened like last week. This was the trade I took last week. You will now be feeling left behind, but you are not on the same race. You are not on the same race at all. So, guys, so that's what I just want to like make you understand, that with your patience, market can still reward you, but you have to still be patient and be patient. And you can also be patient and patient and patient, and market come back here and sweep you out. That's it. You still take it and just with good faith and all that. So that's our time for this night. That's our time for this night. So again, bullish order block is where you buy from. Bearish order block, the last buy count before the downward move. Then bullish order block, the last second before the upward move. Fair value gap, 3 candles that do not touch each other. Very good. Just before I go, you can see that I said this fair value gap, but you see that this is green candle. This is actually blue candle. This is black. This is also black. This is a fair value gap. This is a fair value. It doesn't stop this from being a fair value gap at all. So then finally, breaker blocks. Breaker blocks, just no breaker blocks. When your other block fails, it becomes a breaker block. Wait for your confirmations, then you can actually trade from that. So guys, I'll call it a night here. Then tomorrow, same thing, we'll put everything together again and see, because tomorrow will be our last class. So put everything together and see how you can actually grow from this particular initiative. So I thank you guys for coming. I pray God will use this to bless you guys. So thank you and good night, everybody. Over to you, sir.
Coach, I want to say a big thank you to you for tonight. Once again, it's been incredible. It's been incredible. Guys, I just want to show you something so that you know that all the things he's saying is just a proof. Is a proof of what is possible. Just want to show you. I mean, I spent time with this man, and I know that he's an amazing individual. In fact, if you ask me, he's more disciplined than I am in terms of waiting for trade. I want to show you something. He uses 2 examples for us tonight. Let me share something with you. Let me share something with you. Where are you? Okay, guys. Can you see my screen? Can you see my screen?
Yes.
All right. For everybody that is in the education group with me, remember that I shared this at 5 a.m. thereabout. Take a look at this. The breaker block that is talking to you about. Look at the zone that I marked. You can see his chart. You can see my own is green and white. And let me tell you, to identify all of these other blocks. And you know, when you teach a student, you find a simple way of looking at it. I want you to first manually look out for it. But I have found an indicator that will show you where the fair value gaps are without even you blinking. Just by a click, it will show you everything. Look at the zone coach is waiting for that I want to sell. Because of my nature and understanding of gold, I know gold is going to react from this area that I marked. I've marked this since Sunday. Market has refused to come there. But I know if market reaches this side, at least it must drop a minimum of 100 pips. So you remember what he said about those that will still be able to catch some trade and go away. 100 pips is enough for me. He will catch 500 pips, 1,000 pips. I'm not necessarily interested in that. I want to go in and I want to get out. I don't hold trades over the weekend. He's here. He has not left the call. He holds trades for a long time. But I'm telling you that when you understand the concept, you can decide what works for you. Take a look at where this market reacted from. We mark this as an area where we are going to buy. If I do this, market came there and went all the way up. And you see, this is 600 pips. If I put one lot on this, that's $6,000. One standard lot on this trade. That's $6,000 that you have given me. If I put 0.10, so that have given me $600. What happened there? The manipulation is talking about happened there. I remember this went all the way. However, it came back. You've been waiting for 2 days because this happened. When was this? This is Tuesday. Today is Thursday. Came back. Market always repeats itself. You see these areas that are marked out. Take a look at this. He has taught you inducement and engineering. Look at it. Market knows exactly what it's doing. It has not come to touch it. When market comes into this area, I want to see it. And there are entry patterns too. Like he said, there are many reasons. If market comes now, it's not like I'm going to get in immediately. I want to see it. When it touches, I want it to break. Upon retest of this, I'm joining this guy to go up. I was going to discuss a bit of that when he's done with us tomorrow. But I just want you to know the breaker block is talking to you about. This was all the way when this happened. A market has not come back here. All this is pure manipulation. I can tell you, this was news. And why am I still interested in this area? I have done back testing over and over again and realized that if the candle has come here into this breaker block and close with the body candle close here, I will not be interested again. Because what will happen is that market, if it goes back, what is going to happen is that somebody says my screen is, how can my screen be off? If it goes back, it's going to come back and begin. Somebody said it's not. Oh, thank you, Jerry. If the candle closes, this is what will be happening. Market will keep selling. However, I know clearly with my tests, I've done back testing over and over again, and I realized that if the market doesn't close with the body candle close here, and remember what I told you about the doji candle, this is 1 hour. This is 1 hour. When market comes back into this place, it doesn't matter how much sell is going on. It will first react. Is that reaction me I'm waiting for? I'm not interested in holding the trade for a long time. I can hold currency pairs for a long time. But on gold, trust me, I posted this to you guys generally in the group today. Take a look at this. Take a look at this. You see this line that I marked there? Let me go to 1 hour so that you can see. What coach said, this is what? A support area. You know, on Monday class, I showed you all. This is what they call a range. This market switch from a bullish to a bearish. All I'm looking for on GU, I'm not ready to buy anything. Let people be buying. It's none of my business. I showed you this. I taught you this on Monday. If you have missed that class, go and check it. Can you see? This is additional confluences that I've been talking about. Apart from understanding the structure, there are additional things that will tell you that this is how this market is behaving. This line is not for fun. Take a look at it. What can I use here? It started from here. Each time he's coming to touch it, there are reactions. So I mark it down like that. Look at all that happened there. It's none of my business. He came back again, touches the line. Reactions happen over time. However, when we got to this place, what was I waiting for? The manipulation to happen. It's already on that trend line. I was just waiting for when this happened, he sold all the way down. All I'm waiting for is a retest to retest this portion. And I've told you, without retest, don't go into the trade. Look at what coach is waiting for. Let me go to the 30 minutes. He showed you as an example in the class. And remember, just in case you have forgotten, he said this is what? A single candle what? If you remember, type it in the comment section. What does he call this place? A single candle what? A single candle what? Nobody is typing. I can't see your chat. Who remembers? Thank you, Shola. A single candle what? Liquidity. Because those who are trading supply and demand, they will be waiting to sell from this fair value. Can you see this fair value gap? I'm not the one that typed it too. It's from that, whatever that I mentioned to you. I can switch it off now. You won't see it. I'm willing to give you this. I want you to first learn before I come back. Can you see that I can't see anything there? But we know by virtue of our knowledge that this is a fair value, whatever. But I have a system that opens it up. I'm not waiting to buy at that fair value. I'm not. And if market comes into it, I want to see the reaction. Take a look. Entry pattern. There's an entry pattern to it. If the market comes into it, I want to see the market penetrate into this. They call it, what do you call it? Change of character. I want the market to come into it, break this same thing. When it breaks this, upon the retest of it, some call it the M pattern, some call it QM. If it doesn't break this, I'm not going to come in. This is what I'm expecting. Whatever, take this liquidity out and penetrate this fair value. The only reason why I'm going to trade on this fair value gap is the market will come back and change character. Yeah, it doesn't matter what time frame. Once you break this and come back into the fair value that I created, when you begin to do this, you understand this coming back may create a fair value gap here. And that's the only reason here I'm going to enter the trade and begin to sell all the way. People have different reasons. And like he said, if you are waiting for the POI, look at it. I've marked it there. If you sweep these guys, even sweep the fair value gap and come into this entry, I'm still waiting. I must see it. Come penetrate it, remove it, upon retest, and I'm ready to go. How can market start? When I posted this, I can show you, if you go back to our group, I showed you, I've marked this, where this market is buying now. I've marked this. This POI has been here for days. Take a look at it. This was where market reacted from. And I know when it comes there is going to be reaction. Do you know that some people, this is all they wanted to trade? Take a look at this. This is 40 pips on GPP USD. If you put one standard lot on this 40 pips, you'll be taking like $400 thereabout. But I'm not interested in this because what am I looking for? Sell. Remember, we don't trade the primary what? Structure. We trade what? The secondary. Or whatever this guy is doing here. Whatever he's doing here to go up, he's just preparing us to continue the sell. Let him do whatever he wants to do. When it comes to the area, my POI, I'm still looking for sell. If the sell fails here because or whatever reason, I still have another place here where I'm going to still look for where the sell is going to happen. If you understand the market structure, you understand exactly what you are looking out for, then you become, look at it now. As this guy is coming, or whatever I'm trading from here, this is where I want to get out of the market. I must take this low. I must clear all of this. So it's not joke. I must clear all this off. And that was what he was telling you. If the low is not taken, I mean, if this guy can't take this high, definitely it's going to come back because market will not move until he has taken the money, until he has taken liquidity. Market move based on that liquidity, whether it's on the top or down. Anywhere the market is, anywhere liquidity is, that's what is in there. You see this, all of this is what I call consolidation. If you go on 2 hours, can you see now? This market is just ranging. See, these are people's money, millions of dollars that are sitting here. All this market is not moving at all. You want to see a market that is trending? Let me show you something. Even on the same 2 hours, can you see market that is trending? Can you see? Compare this, all this. This is a good move. These are the things coach is catching. Can you see now that all this is just ties play? I'm not joking. He's just being humble with you. He may not take trade for 2 weeks, but I'm taking trade daily. He trained me, but I'm finding ways of making money every day. Although his money is not compared to the kind of money I'm making. Can you see now? He can decide not to be part of this. Imagine people spend how many days here? This is from Sunday to, let me reduce it. This is Sunday to Thursday. We are suffering here. And imagine all this happen, all of this. Let me put it well. All this happened from Thursday to Tuesday. Serious money. This can change somebody's life for the rest of his life. Can you see? This is over what? This 119,188 on gold. Put a one standard lot. This is $119,000 if you sell from here and you come all the way. $119,000, 800 and something. So guys, spend some time. The reason why I had to show you this is not that I'm trying to take the class again, but just to let you know that all that he's saying are the fundamentals that you require to be able to succeed there. Guys, let me celebrate him one more time before he leaves. Go back, watch this video. Go back, watch this video again and again. Go back, watch it. What you are getting from there. I have searched. I've gone everywhere. I have paid gurus. I have paid money to people. Most of them are liars. They don't even know these things. They don't know these things I'm talking about. But you see this man, come on. He knows exactly what he's doing. If market comes here tomorrow, I may go to bed now, and because I don't trade Asian session, market can come here and hit this point. I'll come back and show you before you start the class tomorrow. There must be, I can bet my life, there must be reaction here. There must be reaction here. The only reason why I may not get into this today is to see what is my risk and reward. How long is he going to sell before he continues his buy? Am I willing to take that risk? Those are the only considerations I'll be taking. We took a trade today. We are supposed to set stop loss, and just 10 pips, market hit our stop loss. Just with 10 pips, I was really paid. But we went back to it, and I told them, okay, let's adjust it. It was my mistake because I was trying to ensure that we are not risking too much. It was my personal mistake. It was still a sell. And thank God we got back into it, and then we make the market. Amazing. All right, guys. It's 9 o'clock, coach. I'm really grateful. Looking forward to that session tomorrow. And then I'm sure a lot of people have gotten value already. Please try and watch this video again. It will really help you. Thank you so much, sir. Thank you so much.
Thank you very much, sir. Good night, everyone.
All right. Good night,
Thank you,
everybody.
Good night,
Thank
sir.
you
God bless you,
so
sir.
much.
Thank you, sir. God
Thank you
bless you.
so much.
All
Really
right. Good
appreciate
night,
it.
sir.
Thank you,
Thank
sir.
you,
sir.
coach.
Good night, sir.
Thank you, sir. God bless you.